Hello, I'm Dr. Keller, and as an economic professor, I teach students every day about the various laws and theories and foundational concepts to help understand how economies function. In economics, several important formulas are used to quantify and analyze different concepts. These formulas help in understanding relationships between variables, predicting outcomes, and making more informed decisions. My interest in economics and its theories and principles led me to a study of the Fourier transform. The Fourier transform is a mathematical technique used to convert a function or signal from its original domain, often time or space, into a representation in the frequency domain. It helps break down a complex signal into its constituent sinusoidal components, sine and cosine waves, showing how much each frequency is present in the original signal. And as an avid stock trader, I wondered if the Fourier transform could be used as a signal for trading stocks. What I discovered was that the Fourier transform can be used in stock price prediction to analyze and identify underlying patterns in the data, specifically the price, but also time is a critical component. And price from several time frames are collected by me and analyzed. So by applying Fourier transform to the stock market data, I was able to decompose the data into its component frequencies and examine how they contribute to an overall pattern. The results tell me two primary things. Either a stock is a strong buy or a strong avoid. And the basics here is that it helps me to identify trends and cycles and other patterns in the data that may not be apparent by simply looking at raw stock prices. One common approach used by others who try to use Fourier for stock price prediction is to decompose the data into different frequency bands and then use each band to make a separate prediction. Fine, that's nothing new. What I discovered is that a proprietary method of using the frequency bands in a unique way to pick stocks that turn out to have either a very long-term upward potential or a strong long-term downward potential. SpectraTrade can also identify stocks to avoid that have, or more importantly, will have and can continue a long-term negative price momentum and underlying weakness. And take a look here at my proprietary spreadsheet I use daily for stock analysis. Very complicated, a lot of math and a lot of calculations used here. Scroll over here. Okay, and then my price data is where my inputs are. And spreadsheet is currently a really manual process that I have to input daily stock prices from various time frames. I'm hoping to raise enough capital to automate the process and create a stock scanner for my clients. And based on the complexity of my spreadsheet, it's going to take an entire team of programmers to interpolate my calculations into a web service. So there will be some cost to collect the price, the time data from a service, and then it will take some time to test and validate the programmer's work. So right now I can only manage one stock at a time, which means that for now my service will be free, allowing you to analyze and track my work. And so I'll be listing my predictions for free on my website, SpectraTrade.com. But if you want a specific stock analyzed, then contact me directly at SpectraTrade@mail.com. And for a small fee, I will run the data. And just a note here that I have everything I have and share that you see for learning is for learning purposes only and not for investing advice. Talk to your broker, your investment advisor before making any financial decisions. It's really essential to conduct your own research and consider your own individual financial situation before investing money. Past performance is never an indicative of future results. Okay, thank you.